Okay. People are joining, and welcome to those people who are joining. We might just give it another 30 seconds before we start, as there's a lot of people jumping in now, and I don't want them to miss anything. All right, let's go. Good morning, everybody. Welcome to our Budget Breakdown 2020 webinar. It's early in the morning here, but it's even earlier in Western Australia, so apologies to those who can't attend from WA. You might be wondering why Employment Hero, an employment management platform, is covering the budget. Well, this year it's because our mission is to make employment easier and more rewarding for everyone, and this budget is all about employment. Also, employment is where all our wealth and income is created, and so it's right in our wheelhouse. We love bringing you expert insights on things that matter to employers and employees, and all these topics today, and today is no exception. We are joined by two finance and accounting experts, our own COO, David Holland, and one of Australia's most successful and entrepreneurial accountants, Brett Kelly, CEO of Kelly and Partners. Before I introduce them and ask them to speak, I'll just give you a quick background. David, or Dutchy as he is better known, has over 25 years of experience in finance, strategy, and investment. And our other panelist, Brett Kelly, is the founder and executive chair and Chief Executive Officer of Kelly and Partners. Brett has more than 20 years commercial and professional accounting experience, specializing in assisting private clients, private business owners, and families. He commenced his career as a chartered accountant with Price Waterhouse, and then worked at a range of mid-sized accounting firms before kicking off Kelly and Partners in 2006 in North Sydney. Kelly and Partners now has offices throughout New South Wales and Victoria, but thanks to the remote first world we live in, Kelly and Partners are servicing clients all over Australia. So welcome, guys. Thank you for joining, Brett, particularly when you're on holidays. Good to have you on.
Thanks, Benny. Thanks for having us. And you know, it's great to see Employment Hero hosting the event to share some information about how the budget can help people who are employing Australians.
Great. Right, today we're going to run through some of Tuesday's budget announcement, the key issues for small business. The structure is that we'll just generally discuss the 2020 budget, unpack it a little, and then we'll look at JobMaker, the JobMaker program, the instant asset tax write-off, loss carryback, small business tax concessions, and then employer default super. Finally, there is also some money allocated towards mental health services, and then we will come to the Q&A. If you do have questions, please drop them in the Q&A section at the bottom of your screen, not the chat section. It's easier for us to manage them through Q&A. Feel free to ask as many questions as you like in that way. And a recording of today's webinar will also be made available with some other really useful information from Kelly and Partners, their budget breakdown as well. So with that, we might kick off, and I'll throw to you guys to say, what do you think of the budget, and is it going to do what it's designed to do, which is get 1 million people back to work? Brett?
Yeah, great question, Ben. I think in your framing there, you're clearer than perhaps the politicians have been. You know, at the heart of an economic recovery has to be recovery in employment. And it's difficult to understand for most people where that employment's created. I think most of your listeners run private businesses, and private businesses in Australia employ 70% of all Australians. So it's not the big companies. And so it is, in the context of this budget, reassuring to see that the federal government has acknowledged who actually does the employing. It isn't large companies, and has tried to do or to undertake some initiatives that they think might assist employers to grow employment. I guess my biggest concern is that I'm not sure politicians, many of whom have never run a business, really understand the psychology of the private business owner who has mortgaged their house and has their good name and reputation on the line generally in Australia, without a safety net to build a business and to provide employment. So while there are significant initiatives in the budget, most of those initiatives are okay, and none of them represent serious tax reform. Now, everyone in Australia knows that our tax system is a bit busted, doesn't really work because its objectives are not clear, and it's been nipped and tucked so many times over the last 50 years. I think the actual Tax Act's now over 10,000 pages and has grown at 13% a year since 1950. So we've got a tax system that doesn't really work, and I'm not sure that, well, I'm certain that the government hasn't used this pandemic as an opportunity to try and really put some wholesale reform through the system. So will it create 1 million jobs? I'm not sure it will create 1 million jobs, but I think it may well restore 1 million jobs. And while that seems semantics, you know, I think we should be doing better than to try and aim just to get back to where we were. Normally in a business, you try and set a forecast, you try and set a stretch forecast to try and achieve beyond what you might otherwise do, because people tend to respond positively to goals. So I think it's a missed opportunity. It's okay, but I don't think it's radical or it's not commensurately radical for the radical challenge that's facing the economy.
Yeah, I think that's an interesting point, Brett, about the 1 million jobs restored. The other element of that, of course, is we still have 3.5 million Australians supported by JobKeeper. 900,000 businesses, I think it was at the last count, and the vast majority of those being small and medium-sized businesses. So I think when the detail comes out, it's certainly going to be important to understand how that's going to help not just the million, but also the 3.5 million, where we really need to see what support there's going to be to help those businesses recover, particularly in industries like hospitality and tourism. But I think beyond that, Ben, the budget was certainly big. I think that they've certainly created enough runway and enough buckets for them to do some pretty meaningful initiatives. But as Brett touched on, the devil's going to be in the detail. So we really want to wait and see how some of these programs are going to be delivered and when. In a couple of cases, some of them aren't earmarked for this fiscal year or until at least late in the fiscal year. So the government promised something big. They certainly delivered on that. The numbers are once in a generation. I think it's probably one of the most important budgets since World War II. And we'll go into some of the buckets they've allocated. But unfortunately, as of today, we probably don't have enough detail. Brett, I'm not sure if I think Ben has actually lost connectivity, so we might just press on if that's all right with you.
Yeah, absolutely. That's the NBN, I think you mentioned, the No Business Network.
Yeah, there wasn't a lot in the budget about the NBN for a change. But look, I think in terms of the general impressions, I think we've covered that. Before we dig into some of the details, and I know that we're very grateful to have someone of your background and expertise to be able to talk to some of the specifics, and I'm sure we're going to see questions coming through on that. But in your mind, just at a very high level, what do you think from a business owner's perspective? What do you think the key elements are that they should be thinking about?
Yeah, so Dutchy, it's a great question. We have at Kelly Partners, we have some unique insights into private businesses. We look after over 8,000 private businesses, and I've been doing this for 27 years, nearly 15 years within the Kelly Partners business. So I guess we look at a budget in a particular way, which I think it's important for our audience to understand today. We believe that, with Adam Smith, that self-interest drives economies. And so when, as a business owner today, you're looking at your business, you're looking at the budget, we believe that you lead from the ground up, not from the top down. So we always start with, what is the impact of any initiative on our people? So today, I want to share the lowering of personal tax rates as a starting point. And so for our audience, I'm starting at what's happening to our people. I'm not starting about the initiatives for business. And I think this is one of the real missed opportunities of the budget. There was some commentary about how this was a budget for the economy, but not for a society. And if you don't get the society right, if you don't get the people right, you can't get the economy right. So what does the government propose? Let's lower the personal tax rates, bring forward already announced tax rate reductions and bring them forward. Now that's going to have about a 2.5, from $1,000 for somebody on $40,000 a year to about $2,500 for somebody on $200,000 a year. So there is some tax relief there, 2020-21 versus 27-18. We've provided a summary that I know you're going to share that makes that pretty clear on a nice little neat table. The reason I raise that is that, once upon a time I worked in a firm and the boss came out at the end of the year and he was very happy to give people a pay rise, and he gave a graduate who was on $40,000, who I'm now married to, a $500 pay rise. And I just remember Beck's reaction. She was kind of like, well, you might as well have given me nothing. Like, what do I do with that? I pay $150 tax, and then it's less than the price of my weekly train ticket. So if we look at what we're doing here for somebody on $60,000, we've given them $2,160, so just over $2,000. So that's nice. In Sydney today, if you look at the price of your monthly ticket from where you might be coming to work, I guess that deals with the train fare for the year, and that's not such a bad thing. Now, given that we've got a lot more remote working and flexible working. Maybe that pays for somebody's internet connection or the kids' sport or something of that nature. Maybe that's beer money if somebody's single. And I guess I pick up your point that hospitality is an enormous employer in Australia. And until we can get hospitality right and employment, we're talking about 1 million, probably not 3.5 million jobs. So great place to start is, as an employer or leader in a business, in a senior exec position, really look at your people today and say, well, what does the budget mean for those people? And it means about $2,000. And that's a meaningful amount of money. It doesn't all come through at once. So it's unlikely to have an immediate impact on the psychology of those people or their behaviors. And so, as we know, a depression is really a great word, an economic depression. That reflects a lot of people in the economy feeling bad. Ben mentioned sort of mental health before. We want to avoid a depression, i.e. a lot of people feeling depressed. And so this will go some way to doing that. But unlike JobKeeper, which is sort of a direct cash transfer that people see hitting their bank account, this is sort of buried in what I call consolidated family revenue, where it turns up somewhere, but no one knows where, and they sure as hell aren't going to spend it. So personally, if I wanted to hand out this amount of money, I'd have loved to have seen the government turn around and use the tax system, where they've essentially got all of your bank accounts, and send $2,160 to your bank account this month. That would have had an immediate impact on the economy. It's the type of measure that the US have used in their stimulus efforts to try and make direct transfers to people, because that money, when it hits somebody's bank account, has an immediate impact on their mind and their behavior. And I guess the final comment I'd make is that as an employer today, if you want to do something for your people, just as a general business tip, if you're going to give somebody a $500 bonus, don't make a big song and dance about it and put it through their payroll. Give them the net, put it through the payroll, but take it out as cash, put it in an envelope and give it to someone, because they'll actually remember that happened. Whereas when it goes through their normal payroll, it just goes into their normal bank account. Somebody takes some tax out and some super comes out. They get a bit and they never come and say thank you. It never makes a difference in their mind, and it certainly doesn't change their behavior. So that's kind of where I start. I think they've done little to not much for individuals, and I'm not sure that means that we're going to get the sort of kickstart we'd like to see. Now, that long preamble, I guess, then is a question as to what are the business initiatives and what is that going to do? And the government are right to understand that it is private businesses that employ people, and they do employ 70% of all Australians, small businesses. And so that I do think that their measures here, you'll notice that they've carved out, I think it's the top 50 companies. I think they're still clarifying exactly who'll be in and out of that. But that's at least an acknowledgement from the government that it's not Woolworths or Coles that are going to significantly change move the dial on employment on that 3.5 million you mentioned, Dachi. It's going to be small businesses across Australia, many of whom are your clients and our clients.
Yeah. Well, thanks for the opening remarks. Pretty comprehensive. And it's interesting that you start with the people because, of course, that resonates with Employment Hero. Ultimately, we're all about helping businesses manage people and helping them get the most out of their careers and the employers to get the most out of their teams. Look, I'm sure that the people online have joined us this morning are keen to hear some of the details. I know that you've acknowledged that until the legislation comes through, it is going to be difficult to be too specific. But I might take the opportunity now just to sort of talk about some of the business initiatives, if that's amenable to you.
Yeah, that's a good idea, Dachi.
I think in terms of the one that's getting the headlines is the JobMaker hiring credits. But when I was looking at the fiscal estimates, the big bucket in terms of the one that's going to provide potentially the most dollar value benefit is probably around the instant asset write-offs, the full expensing, the small business concessions. Is that your reading of it too, or have I missed a big bucket somewhere?
No, so I had a great little graphic that I saw yesterday that made clear where the money was being spent. I was just trying to find it, but it is in this immediate deduction for business assets. That's overwhelmingly the largest initiative of the government. And let me give you some commentary about that, because I think this, rather than be, I don't think the budget has taken the historic opportunity that exists for the government. However, they've done what they can and within the political constraints that they face and their own measure of courage. So what have they done, I guess? The immediate deduction for business assets is enormous. I think I'd love to talk about JobMaker, which I will. There's 4 major initiatives, but this is big stuff in that in the US, there's an unpopular, politically unpopular leader in the president's office over there. But, the US government's a big government. There's a lot of smart people in a lot of the roles that make up what is an enormous government. Now, one of the things that they did upon the election of that new government, Republican government led by Trump, was they came up with this immediate deduction for business assets. Now, I just want to foreshadow here, guys, that Joe Hockey, the former Australian Treasurer, has been Australia's ambassador to Washington. Arthur Sinodinos, former chief advisor to John Howard, is now the US ambassador to Washington. So the influence of US economic policy would be very well represented to the current Australian government. And I see that reflected in this initiative. So what Trump's government did was, when he took power, he did 2 major things. He lowered corporate tax rates, which I'm sure here they would do if they had the power that the president of the US has, which is just to unilaterally, use the House that they had control of at both houses at the time of their election to lower rates significantly. So they took the rate from anywhere effective between 30 and 36% federally to 21%, which is just gigantic, right? A 30% reduction in corporate tax rates. That's what you would do today if you could. They can't do that. But the second major initiative that didn't get the headlines with the general public in the US or here was a massive asset write-off program. Now, I'm giving you that preamble because I'm hoping that the legislation that we see reflects the US legislation, and I suspect it will. And if it does, today there's an article I was reading this morning, I think it's FinReview, saying that it's announced as a $27 billion initiative, but they think there's only a $3.7 billion immediate impact. So I think that it's too early to make that call, because I suspect that the legislation that will ultimately end up passed is much, much, much broader than has ever been seen on one of these programs before, is my earnest prayer for all Australians. And what that will mean is that the criticism that Trump received in the US was that you go and buy yourself a new corporate jet and write 100% of it off in the first year. You could, and that's a sort of egregious sort of commentary that came from the media. But what it really meant was that as a small business, if you bought a computer, a chair, a desk, essentially just about anything to assist your business, you could write it off 100% the first year. Now, if that is what happens here, this thing could be very, very, very impactful over time because, essentially we're generally running typical depreciation, which I'm assuming most of the audience understand what that means. But this program means that you get an immediate deduction. The big swinging test will be what is capital investment. So how's that defined? There's two sections of the Act. I believe that this will be the broadest definition that we've ever seen in one of these initiatives, because this initiative itself is not new, but the quantum that the government's talking about allowing through this door is to use that overused word, unprecedented. So I think this is the measure that holds the most hope for turning the dial the largest and the fastest in terms of the economy. So we've got some notes here. It applies to assets acquired after the 6th of October 2020. So, for our audience, typically at the time the initiative's announced from the pillbox in Parliament, it becomes effective. That said, it's pretty hard to know exactly what it's going to be today. But my advice to a business today is that they're likely to see a very, very broad definition of what's able.
But in terms of focus over the next month, as the legislation comes through and more details, that's an area that you would encourage small businesses to focus on first in terms of finding opportunities.
Yeah. So today, I would be speaking to your accountant. Your accountant will be edging like me, saying, "Well, we haven't seen the definition yet." But I would be saying, like, interestingly here, small businesses with aggregated annual turnover of less than $10 million can deduct the balance of their simplified depreciation pool at the end of the income year, while full expensing applies. So sorry to bore the non-accountants out there, but call your accountant and ask them what that means, because that does mean something significant for virtually all small businesses in Australia. And what that, I think, in particular means is that people should make sure that their accounts are up to date, that they're preparing. They should be generally doing that anyway in this type of economy, but they should be preparing their accounts fortnightly, weekly or monthly, on time, stay on top of your tax, and make sure that you understand what's in this pool. Because if you get on top of this, get your return lodged on time or as quickly as possible, that means a genuinely large difference in your tax bill this year. So that for an accountant like me, I can get a little bit excited about that for the clients and your clients and mine. This means, this is significant. I think we should watch what the definition is going to be. But it is, I think, very, very, very important. And I want to read you one last little comment that we've included here. If increased deductions for capital investments contribute to a company's tax loss position, you can elect to apply the loss carryback provisions. Now, before everyone goes to sleep, we nominated to do this at 8 a.m. so everyone was awake, just to guard against people falling asleep. But electing to apply the loss carryback provisions may allow the company to obtain a tax refund. So, essentially what the government's allowing you to do is take this maximum deduction, go into loss, and then use these loss carryback provisions to get the money out.
Yeah.
So this is extraordinarily generous. I'm saying and praying that the legislation is as broad as I expect it will be. I believe it will be based on the US program. The US program did pre the virus drive US unemployment to its lowest levels in over 50 years across all socioeconomic groups. And that is what I believe this government is awake to. they understand that it's the cafes that do the employing. If every cafe in Australia knocks off one barista, we've got a huge problem. And so I think that this is particularly exciting and is likely, if the client's well advised, to make a big difference.
In spite of the fact that
can I just jump in there? So apologies to everybody. I had to reboot my internet, and that took a lot longer than anticipated. Even my 4G was out. Can I just clarify? We're still talking about the instant asset write-off scheme. You covered the other points. Great. Brett, I know you're talking about that loss carryback provision, but can you put that into a basic example for people like me who switched from accounting to economics because I didn't understand accounting, just couldn't understand accounting? How would I do that? Buy some assets, make a bigger loss, and take that forward. Can you put it into layman's terms for a business owner?
Yeah. So Benny, what they're saying, and again, I gave a context just before you came back on, that I believe that Joe Hockey, the former Australian Treasurer, has been the most immediate Australian ambassador to the US. Now that Arthur Sinodinos, the ex-chief of staff to John Howard and Senator, is now the Australian ambassador to the US. This stuff comes from Trump's initiatives to grow the economy post his election. So he did two big things. He dropped the corporate tax rate by over 30% to its lowest level in 50 years, equivalent to ensure that their tax rate was as low or close to as low as China's and Hong Kong's. And then what he did was he put this massive program of instant asset write-offs into businesses. So you could effectively build a steel mill for $1 billion and you'd get 100% tax deduction in a year that you spent the money. So that lit, it's not, because Trump's personality can be very offensive, there's not been a lot of focus on the policies that drove their unemployment level to the lowest in over 50 years. And these were the two big initiatives that they did. They said to businesses, they did one other, which was to allow US companies to bring all their offshore profits back into the country at a concessional tax rate. So they brought a lot of capital back in. They dropped their corporate tax rate so that they were, it was just as competitive to do business in the US as anywhere else. They kept their minimum wage at $7 an hour, $8 an hour. And then they've run out this massive instant asset write-off program. Now, I'm hoping, and I believe that this is where this program has come from. It's come from studying what the US have done. And I'm hoping that the definitions in this iteration, this has been done before in Australia, but in this iteration of the program will be very, very broad and will allow you effectively to write off your corporate jet or whatever you want. And I'm using that example because mostly what we heard here was that, you could buy a jet and write it off. What in fact happened was that people started steel mills that hadn't been running for 30 years, reconditioned them, spent the money on them because they could get a tax write-off straight away, and their actual tax rate was so low.
But
so going forward.
Sorry, I was going to say, if we bring it back, because we've just had a question, a comment to try and bring this back to Australian SMEs. If a restaurant goes out and spends 150K on a new kitchen fit out, if an office-based business goes out and upgrades all its technology infrastructure, just to confirm, that expenditure can be written off in this fiscal year 100%?
That's exactly right. So that's, in terms of the preamble, so the tax refund on loss carryback will be available on election by eligible businesses when they lodge their 2021 and 2022 tax returns. So we are lodging 2021 tax returns right now for the end of 2020. So 2021 tax returns will be, say, July, 1st of July. Go to your accountant early. It will be very busy in July next year, and it'll come out through the tax system in tax that you don't have to pay. Now, if you've got a good accountant, they should be looking at what was the old provisional tax, what tax you're paying as you go in your business, and they should be tax planning for this expenditure and looking to reduce the tax you're paying as you're moving through this year, taking into account what your actual tax payable is likely to be. So it means that, to your question, Dutchie, if you go out today and do, say, a fit out of a kitchen, you can take 100% deduction of that broadly speaking. And you should be able to look at what tax you're paying on a quarterly basis and at the end of the year and get your accountant to do some work to make sure that you're not paying tax that you're ultimately going to be refunded in the first place. And that if you end up driving yourself into a lost position through these initiatives, you'll be able to get that paid back to you on lodgement of your tax return. So the mechanics are important. They're not 100% clear yet. I'm just looking at this 150K, some of the questions for the 150K kitchen fit out. Approximately, if you're paying 30% tax or 27.5% as a small business, you can get approximately 50,000 of that back because you will be able to lodge your return because you'll be able to claim 100% of that amount as a deduction straight away. Does that make sense?
It does. Thank you. And is this the small business tax concessions, or is that another aspect to the budget?
So this is just the immediate deduction for business assets, and then we're just touching on loss carryback.
Yeah. Okay. So then, I think we've covered the loss carryback provisions. Is there anything else there? Any other advice there for people? And there was one question of clarification, which is, does it apply to companies or businesses?
Yeah. So this is So there is some confusion at the moment, and it was picked up immediately upon release of the budget papers. The government's, it appears to apply to companies and not to trusts, sole traders, and partnerships. But I wouldn't lose any sleep over that at the moment. I would be speaking to your accountant. I believe that it's a good example of, what you see at first isn't what you might see in the legislation. I think that if the government limits it just to companies, they won't get anywhere near the impact that they're looking for because of the way private businesses are structured. Companies like ours, the moment we saw that, every political connection that we have, which is kind of everyone, got a bit of a text message from people like me to say, hey, guys, if this is just for companies, you're going to miss a very, very, I would think more than 50% of the small business sector are not structured as companies. So I don't want to...
So keep an eye on the detail.
Just keep an eye on the detail. I don't want anyone to sort of drag themselves down that depressed rabbit hole at the moment, because I don't think that's what it'll ultimately turn out to be. I believe that they're trying to make this as broad and as deep as possible to essentially all businesses in Australia other than the largest businesses in Australia. And I think the limits are incredibly generous.
Yeah, I agree. So there is also talk around the small business tax concessions. How can SMBs take advantage of the tax concessions? How does that work, or anything else to add there?
Yeah, so I don't see anything there that's anywhere near as significant as these measures. I think that what any SME should be doing today is they should be firstly making sure that they've got a relationship with an active accountant, and an active accountant means one that's not asleep. And they should be asking their accountant to actually look at their business and tell them what they think would actually apply to their business. Because
so the increase in the small business tax concession from 10 million to 50 million, what if you're in that, if they've increased the scope there from 10 million up to 50 and you fall into that bracket, what does that give you access to that you didn't have previously?
It's mostly about the these actual instant asset write-offs that they announced earlier, that this enhanced 150,000 instant asset write-off. They came out with, an initiative that looked at what you could do with your depreciation pool under that. And this thing here, where they've actually said that if you're a small business with aggregated annual turnover of less than 10 million, and I think this is the most important thing, can deduct the full balance of their simplified depreciation pool immediately. Now, look, I suspect a lot of small businesses don't know what's in that depreciation pool. It's normally something that their accountant's doing in the background, and they don't really know what it is. They don't really pay attention to it, and they don't know what the cash flow impact of that is. So I would be very strongly urging a business that thinks they're in that situation to go and find out what their account says the difference of that is going to be. We've made a little workbook that allows us to to basically go in and look at a small business and say, okay, these are all the initiatives available at the moment. This is the impact on your business. So that's what I'd do today.
Excellent. All right. Well, again, apologies. I've sort of lost control of the program in having my NBN shut down. Dutchy, I think I'd like to switch now back to you and some of the flack that the government has copped around superannuation and how that's managed. But the budget brought forward or announced quite a large change to super funds. Do you want to talk us through that and how that affects Australia's employers and the way they manage super?
Yeah, it was certainly a lot to say about super, and they have been criticised a lot, allowing early access to up to $20,000, and there's talk about delaying the legislated increases in the SG guarantee, in the super guarantee. I think there's three goals that the government have put forward in this budget around super. One is to reduce the proliferation of multiple accounts. Definitely to reduce the fees paid. I was stunned by the comparison that Aussies pay more in superannuation fees than they do in electricity and water combined, in energy and water combined, and to reduce underperforming funds. I think putting the politics of that aside, the one key element for businesses that they need to be aware of will kick in on July next year, and that is the change to the way the default works. No longer will the default sort of be the primary mechanism for dealing with employees who don't nominate a fund or choose a fund. And it's important to emphasize that priority of choice. If an employee has a fund and they want to choose a fund and they nominate a fund, that is ultimately the golden rule, that you must honor that choice. But what's changing is where they don't do that, instead of defaulting them into the employer nominated fund, the employer actually has to go online and search for an existing fund of the employee that they already have. And I think I'll be really interested to see, this is where I get a bit nerdy, Brett, but I'll be very interested to see how the ATO and the government deliver that, because they haven't got a great track record of providing user-friendly information access. So it could potentially be quite a big burden on the administrative side of people who employ a lot of, onboard a lot of employees, to have to go and check what the fund is. Again, we don't have the details. I suspect they'll be using MyGov. I hope they improve the usability of it between now and then by tenfold, because it's a pretty tough platform to use. But that's probably the biggest implication for businesses. There's a ton of stuff happening around members and employees, but I think given that a lot of the questions are coming through relate to employers, we might leave that conversation there. Just remember that from July next year, you'll need to be searching for your new employees' existing superannuation funds.
That is a huge change to the Australian industrial relations system, where default funds had previously been part of the industrial relations system attached to awards, and now those awards are separate to the superannuation system. So finding members, retaining members, and minimizing fees to stay in that top quartile of high performing funds is going to be a whole new thing. So yeah, it'll be really interesting to watch that.
Ben, we actually haven't, we jumped into the instant asset write-off and the small business tax concessions because that's the biggest bucket. We actually jumped over JobMaker hiring credits.
Yeah.
I think.
Sorry about that. Yep.
Yeah, I was going to say there's a lot of detail yet to come on this, but we should probably.
I was wondering how you managed to get so far into it while I was away.
Well,
no, we didn't.
All right. Well,
just there is a slide, guys, on to your question, Ben, on increasing the small to medium business enterprise turnover threshold. So we have put a slide together, which I know you'll share, that just shows that businesses with aggregated annual turnover of 10 million or more, but less than 50 million, for the first time have access to up to 10 further small business tax concessions in 3 phases, which is, I think, what you might have been talking about. So immediately deducts certain startup expenses and certain prepaid expenses. They'll be exempt from 47% fringe benefits tax on car parking and multiple work-related portable electronic devices such as phones or laptops. This is pretty in the detail, but you know, in the past there was employee declarations required around FBT, which are now not going to be required. You can rely on employer records. and there'll also be simplified trading stock rules. So there is a bunch of stuff in there in the detail that I think is worth talking to your accountant about. And there's no changes to small business CGT concessions, which is also pretty helpful. Bunch of compliance reductions with respect to FBT, and a bunch of FBT exemption to support retraining and reskilling. So I think that's kind of worth mentioning. But to what you just raised there, Dutchy, has been dropped off, and we can come back to now. The job maker hiring credit, I think the government sees as its next largest initiative and something pretty squarely aimed at driving new employment.
Yeah, do you want to talk us through that? How does it operate, and what type of benefits do businesses get?
Yeah, so this guy's, if you can just see my hands, the nerves of making a public statement about JobMaker. So JobMaker will be a little bit like JobKeeper. It started as one thing and it developed. And while the government was criticised as to how big it was going to be, and then it was smaller than cost less money than it was going to cost, and then it cost a bit more money than it was going to cost after it was going to cost less money than it was going to cost. That to me was government, rather than being on the run, was iterating as the situation developed. These are incredibly difficult things to forecast in real time. So I think the big picture here is what's important. So the government's going to make a credit available to eligible employers over 12 months from the 7th of October, i.e. today, to the 6th of October. So for the next 12 months. That employer's got to demonstrate that there'll be a new employee, so it's for new employees, and that new employee has to increase the overall employee headcount. So you can already imagine the definitions here of what was the headcount yesterday, and this is where I think your software will help, Ben. What's your headcount today? It'd be very interesting to see how that's worked out. But basically, they will receive $200 per week, the employer, if they hire an eligible employee aged 16 to 29. And they'll get $100 per week if they hire a new eligible employee aged 30 to 35. The credit will be available for the 12 months with a maximum amount of $10,400 per additional new position created. So it will be, what are the definitions of new positions created? Most employers would be eligible. However, employers must have an Australian business number, an ABN. They've got to be up to date with their tax lodgements obligations, which is really important. So for the audience out there, if you've let your lodgements slip during this crisis, you need to get on top of it. We were saying to our clients when this crisis started, get on top of your obligations. Don't step away from them, because the government's tying most of these initiatives to people being up to date with their tax lodgements. You've got to be registered as a pay-as-you-go withholding. You've got to report through single touch payroll. So the single touch payroll system, again, is being utilised here. It's a really important system that allows essentially instant connectivity between the government and an employer, and you can't be claiming the JobKeeper payment on that person. So I'll just give you the employee eligibility. Again, this is the first cut that they've shared. The JobKeeper, you've got to demonstrate that the job is additional. Specific criteria must be met. The additionality criteria require that there's an increase in the business's total employee headcount, minimum of one additional employee, from the reference date of the 30th of September. So how many headcount you had on the 30th. The payroll of the business for the reporting period as compared to the 3 months to 30th of September, I believe has to increase. The amount of the hiring credit claim cannot exceed the amount of the increase in payroll for the reporting period. So you can't effectively replace, existing payroll cost with this program, and there has been a bit of that with JobKeeper. To be eligible, the employee will need to have worked for a minimum of 20 hours per week, averaged over a quarter, and receive the job seeker payment, youth allowance, or parenting payment for at least 1 month out of the 3 months prior to when they are hired. So this is going to be fairly interesting in terms of who you try to take. So the government's effectively saying if they were getting JobKeeper, they come back in and they're not eligible in this program. But if they were getting Job Seeker, There's somebody who effectively didn't have a job that you're now giving a job to, and they're happy to subsidise that job. So, guys, I think that, you know, it's going to be claimed quarterly in arrears from the ATO from 1 Feb, and you'll need to report quarterly that they meet the criteria. So this, I think, is an enormous opportunity for small businesses as people seek to add team members back to their teams. This can go a long way in that first 12 months to provide a significant cushioning to a business that I do think may help sort of get a business over the line in terms of a decision to employ somebody. You know, that's a potentially 25% reduction on a minimum wage $40,000 job.
Yeah.
And I'm just going to fill in some blanks there, because I know there's some people asking. The registrations for JobMaker don't actually open until December 7th. So I imagine there's somebody at the ATO website working out how to build and make that registration work. But Brett, it appears that the eligibility is from people employed from yesterday. So eligible employees employed from now on will be eligible for JobMaker, but you can't actually register for the scheme until December 7th via the ATO website.
Yeah,
which kind of makes sense considering it's claimed quarterly in arrears anyway. So by the time you get there, you're just claiming for that first quarter.
Yeah.
Yeah. So I think that, you know, I heard a bit of commentary. Well, you know, if it's not up till the 7th or whenever it's up, isn't that a drama? You struggle to get most businesses to sort of get their tax records together and get their tax return lodged within a couple of months. This will be the government putting together an entirely new program that I think will be accessed by an enormous number of people in less than 8 weeks. So, and to your point, Ben, you know, if they've opened the eligibility criteria and you can first lodge your quarterlies on the 1st of Jan or 3rd of Jan, then, and it is paid in arrears, then that hopefully will all come together quite well. But it's a sort of initiative that, you know, at Kelly Partners, we're really about helping private businesses grow employment and the wealth of their owners and their team. And, you know, I really believe that employment is very critical to people's quality of life. And this, I think, is an initiative that goes directly to helping private enterprise solve what is one of society's biggest challenges, and that is providing, you know, any employment, let alone meaningful employment, to a bunch of people. So I think it's very much on the right track. Now, obviously, getting the tech right so it's easy to access and easy enough to apply for and work out is great. But these, you know, these are initiatives that even 12 months ago you could never imagine a government of either stripe offering to hand out. This is a massive corporate handout.
Oh, I completely agree. Hey, guys, just looking at time and realizing there's some questions coming through. There's one last discussion point before we switch over to answering questions on the fly. So that last point is around the $4.3 million that has been committed towards Beyond Blue new access for small business service, meaning that the owners of small businesses can now get free one-on-one telehealth sessions with trained mental health coaches. I think this is incredibly important. The stress that small business owners have been under, it is fantastic to see the government acknowledging that and giving some resources towards those people and their mental health. What do what thoughts do you have on that, Brett and Dutchie?
Yeah, so Ben, you know, part of the role of our accountants and partners during this crisis has been as essentially a counsellor to people that own businesses that, particularly in our business in Victoria, we've had clients call up, you know, intimating and declaring directly that they might as well throw themselves off a building because, you know, their situation is so dire. So I don't think that the mental health impact of this situation, particularly the carry-on of the Victorian government, can be underestimated in terms of, you know, what it's done to people's brains, if you like. So any initiative that firstly acknowledges and creates awareness that for an owner or a team member that is under this pressure, we've actually put into our business a program with an external company that we're not only offering to our people, but we're offering to clients, because we had seen how big this impact is. And it was having a real impact on our partners trying to deal with, essentially coaching people through mental health situations. And what we wanted was a professional that we could recommend that could help. So I think the government's on the right track here. I think it's very, very important. That said, if you get the sort of behaviour that we've seen from the Victorian government, then it won't matter what programs are put in place. Curfews that are not based on health, necessities and this sort of crap, and the, erosion of our democracy is not going to be solved with a few $1 million, out the door to mental health capabilities. Yeah. So maybe ScoMo could go and break some arms in Victoria and try and get some sensible behaviour. But this is, given that he can't do that, this is the next best thing.
So yeah, step in the right direction. Important acknowledgement that this is an area that we as a society and as an economy need to focus on. From a purely monetary perspective, we know that health initiatives that intervene early in any type of health condition, including mental health, have positive ROI because they help try and prevent problems early and stop them from getting worse. And in this case, helping small business owners specifically carry on through some very difficult times. So yeah, important initiative, but more to be done.
Okay.
Looking at the questions, I've got one for Brett without notice, if that's okay. Can I kick off with the questions?
Well, I'm just going to say, Dutchy, let's, with the time we have remaining, let's try and focus on quick fire answers and get through as many of these as possible. And I'm sure those people on the call, we've covered a lot and there is a lot in the budget. So please start throwing your questions into the Q&A box and right now, and we will address as many of them as possible. And yeah, back to you, Dutchy, to start off the quickfire answers.
Although it might not be a quickfire question though, Brett, but as concisely as possible, there's a couple of questions being asked around cash flow. And some of them are, okay, it's great to have an instant asset write-off, but what if I can't afford to go and install a new kitchen or upgrade my technology? It's great to have an apprenticeship scheme or a job maker, but what if I can't afford to increase my workforce? So in a nutshell, what's your 101 on cash flows for small businesses in this situation?
Yeah, so guys, I recorded a webinar right at the beginning of the crisis on cash flow. I'd love to share that with you. It's got like 10 things you should do to sort your cash flow out. Very, very quickly, the first thing that every business should have is an effective way to issue a bill and collect that money. What most businesses don't have that really lets them down is a willingness to bill for their services. I'm constantly, surprised at how slow people are at billing. So the first thing you need to do is either bill in advance, bill on the day you deliver, but you need to secure the cash flow from the activities that you undertake as a first point of call. Secondly, eliminate every non-absolutely essential expense in your business. If you don't need to be spending money and it doesn't have what I call a dollar productive impact, then don't spend that money. Just to be very concise, they are two things that I see almost no small businesses do. Final one is that most small businesses don't have any sort of cash flow forecast. They just don't look at their cash flow. So anything that you look at every day will get better than something that you don't look at. And so, they're my 3 quick tips, but I do have a full hour on that we got really great feedback on. And if people are interested, I'll get you a link and we'll share it.
Yeah, we'd be happy to share that. And Jules, who's running things behind the scenes, has also posted a poll just asking whether people would like to hear more about the budget announcement. I think we've got I'll end that poll, but 95% of people are keen to learn more. So we will run a second session and include our WA attendees as well. We'll do it at a time when everyone can attend. And I think it'll be really important to run that after we see some of the legislation, and we can be a bit more specific about exactly what's in and what's out.
And we can take some of these questions as worked examples, and we can look over the next week or two at what actually comes through and how to solve these questions.
Yep. Yeah. So, Dutchy, any other questions you see there?
I think there are some very specific ones that relate to the value of assets. I think they're probably best dealt with, as Brett just suggested, worked examples with the detail. Interesting question there about SaaS and cloud technical asset infrastructure, but again, that's going to come down to whether the definition is in the
Actually, I didn't see that one myself, but that was the one question I wanted to ask you, Brett. And there is a lot of self-interest in this, but the businesses today are spending more money than ever on technology and particularly cloud technology to help run their business, accounting software, HR software, payroll software. Are those assets, are those things going to be included as a tax deduction, or is there any way to help people access the technology they need through this budget announcement?
Yeah, I actually believe, I haven't seen anything that specifically addresses it, but I can't see why any of the, any sort of, to that question, any of the cloud or SaaS architecture infrastructure would be excluded. So I think that they're pretty alive to these issues and where the economy is going.
Excluded to the extent that it's not an asset, right? It's an expense. So I presume what would happen there is if somebody paid for a license agreement up front within this year, it would contribute to their losses and they could take forward that loss, but it wouldn't be considered to be an asset that they had gone out and purchased and could therefore deduct immediately. Is that,
yeah, so
again,
if it's a
I did fail accounting.
No, so if it's, Benny, if it's a subscription, then it's an expense that's deductible anyway.
Yeah.
Because it's not depreciable.
So nothing changes. Yeah.
Oh, so nothing changes. But this question that I saw here, it'll be interesting to see if capital investment captures SaaS and cloud technical assets infrastructure. So if you're a company that is building infrastructure to deliver cloud-based or SaaS technology, then it will apply. So if you went out and built a data center for $50 million, I suspect that you're going to see that you can write off aggressively most of that infrastructure cost. And for a consumer of subscriptions, they'll get to expense those in real time anyway.
Yeah, understood. Okay, other questions, please contribute to the Q&A section there.
There's just to address one thing. So after the webinar today, we'll be distributing a summary document from Kelly and Partners that covers at least in as much detail as the current information allows, some of the key topics for small businesses. And we will also get that link from Brett on the cash flow to share out to people as well. So all that information will be emailed out to everyone who's registered for the webinar today.
Yep, that's great. And there'll be a lot of follow-up material. And again, we will also prepare a follow-up webinar to address some of these other points once we have more detail. Any other points you'd like to address in the last couple of minutes, Brett?
Look, I think one of the great questions there, I'll just quickly run through, is that there's nothing here that really addresses short-term cash flow. So cash flow boosts and these things, which I thought were great initiatives, are sort of off the table now, it appears, but we'll see what happens next. I'm just rolling through, there's about 15 questions. So, this good comment here, instant asset write-off is good in theory, but most small businesses don't have the cash flow. I think that's probably true. What sole traders taking on new employee be able to claim this job maker subsidy we covered? I've had a traditional trade-based business, Clapper's apprenticeship, tradie. So look, I think it looks like we've covered most of that. I guess there's at some point in this new world, as business owners, we need to see an opportunity to lead with a positive mentality and understand that this is by far the largest corporate handouts probably ever even contemplated since World War II in Australia. And so if an owner and senior people in businesses today can't put a smile on their dial and say, listen, we're lucky to live in Australia where the government has not only the financial capacity to make handouts of this dimension, but also the technical capacity to actually get that money out the door and put it to people, then we need to have a good hard look at ourselves. This is the freest country in the world with the best environment, I think a democracy in probably the best shape anywhere in the world, and a capacity to invest in its people beyond anything that exists anywhere else. So, we like to pride ourselves on being, entrepreneurs, people in private businesses, not working for state-owned enterprises. Well, this is state aid, and so at some point, we need to jump up and do our best work, as I know people have been doing, and try and keep a positive mentality, because I'm certainly extremely grateful that I live in Australia in the middle of a global, health crisis of this nature.
Yeah, we are the lucky country, and I do think that the way that the government has responded to this pandemic has been, or the federal government needs to be acknowledged as a fantastic response. They've done very well. Dutchy, any last points from you?
Not as profound as Brett was able to just reach, but I'll just mention briefly in response to a couple of questions. You can register on the ATO website for updates on the JobMaker program. So I would suggest that anyone that's interested in that should go and register there. But otherwise, yeah, just Brett, thank you very much for those insights today. Much appreciated. Yeah,
Brett, thank you so much for attending. Brett's business, as I mentioned earlier, is Kelly and Partners. You can access them now in the remote world that we live in online, and engage with an active accountant, as Brett calls them, anywhere from Australia. He is a fantastic entrepreneur, as well as incredibly passionate about small business. So thank you, Brett, for your time. Sorry that my NBN played up so poorly at the start of the webinar. It's made things a little bit difficult, and next time I'm sure we can make it run a hell of a lot smoother. Dutchy, thank you for your time as well, and I hope you all have a happy Thursday, and we look forward to supporting you in the future.
Thanks, Benny. Thanks, Dutchy. Thanks to Employment Hero. Have a great day.
Cheers, everyone. Bye.